What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. Let's go ahead and talk about some stocks and about what happened today in the markets. And the markets did pretty well today, guys. We saw a very solid rally today, led by the Russell 2000, up 2.05%. Nasdaq went up 0.93%. Dow Jones went up 1.87%, and the S&P 500 went up 1.17%. Was today a bull trap? It could be a bull trap, but we are going to go over the S&P 500 in just a second. However, guys, something that really caught my eye today is the fact that the S&P 500 refuses to go down more than 6%. So throughout this year, we have seen volatility when it comes to the S&P 500, and the lower that the S&P has gone relative to all-time high, whenever we have seen some sort of correction in the markets, has been 6%. So we are in a situation, guys, in which we take a look at the major indices. When I mean the major indices, obviously I am talking about the S&P 500 and the Nasdaq 100. And apparently, guys, on the surface, everything is pretty acceptable in the markets, right? However, we are seeing as of now, guys, a silent crash. No doubt about it. So we have a handful of stocks, and this is something that I have explained to you guys plenty of times, that have been doing the heavy lifting. The Amazons of the world, the Googles of the world, the Teslas of the world, the Microsoft of the world, the Apples of the world, and so forth. So whenever we see a, let's say, a nice drop in the S&P 500, the dip gets bought up, guys, because we are also in a situation as of now in which the new blue chip stocks are the big tech names. And why? Well, because those companies that I just mentioned have proven, guys, to do pretty well regardless of whatever is going on with the economy. So the markets have been punishing in a very aggressive way most of the stocks out there, because as of now we have the vast majority of stocks out there, I would say, guys, trading 30, 40, 50, 60, even 70% of its highs, and only a handful of stocks are making up the situation of the major indices. And let me show you this, guys, because today we saw a very decent day in terms of the recovery that the major indices and most stocks out there were needing. So take a look. Today we had 5,074 stocks advancing, and we had 2,354 stocks declining. So the vast majority of stocks out there today went up. However, take a look at this detail. 2,072 stocks went up today, somewhere between 2 up to 5%, whereas only 534 stocks went down today, somewhere between 2 up to 5%. So a very nice day in terms of the general performance of the markets. And obviously, guys, how low can small caps and higher multiple stocks keep on going? That's a question that everyone is asking as of now, because we are seeing a massive pain all across the board when it comes to small caps and higher multiple stocks. So is the bottom in? Are we going to keep on going lower? Because if we take a look at the Nasdaq 100, last Friday it had gone down something like 7 or 7.50%, which is a nice drop in the case of the Nasdaq 100. So let's see what happens. I don't think that the bottom is in. You guys have to keep in mind that we have on Friday a very important day, because the CPI data report of November is going to come out. If that report happens to come out way worse than expected in inflation terms, then we might see next week, because next week on the 15th or the 16th, we're going to have the Federal Open Market Committee. So if we happen to have a way worse than expected CPI data report, then the most likely outcome out of the Federal Open Market Committee is going to be Mr. Jerome Powell letting us know that they are going to accelerate the tapering process, which is something that the markets are okay with, give or take. But what the markets are concerned about the most is the Federal Reserve letting us know that the first interest rate hike is going to come sooner than expected. That is the main concern of the markets as of now. So let's hope for a miracle, guys. Next Friday on the CPI data report, who knows? Maybe we can get a better than expected CPI data report in inflation terms. If that were to happen, if that were the case, guys, then the Santa Claus rally is going to be pretty much guaranteed. So let's see what happens. If we take a look at the sectors that trade inside the S&P 500, today we had a green day all across the board with the 11 sectors going up, led by consumer staples. Something that caught my eye today, guys, is that consumer staples was the sector that led the way. So that lets me know that there is still fear out there, guys, because consumer staple is, for the most part, a defensive sector. So this is a bit, concerning. Let's just put it that way. Financials, which is the second most important sector out of the bunch, went up 1.47%. We saw a very acceptable recovery when it comes to the 10-year Treasury yield that got absolutely crushed last Friday, and tech went up 0.96%. Something that is worth pointing out about today's trading session, guys, is that finally, at last, most of the Chinese stocks saw a recovery day, and also the reopening stocks. So that's positive, guys, because it seems like the Omicron fad is going away, and the markets, or the big money of Wall Street, is aiming at reopening stocks once again. Before going over S&P 500 and the Nasdaq 100, I want to show you guys the trades that I closed today. First of all, full disclosure here, guys, I am a long-term investor in NIO. So until today, I had 2 long-term positions in NIO. The first one, I would like to show you guys my main long-term position in NIO, okay? So this is my main trading and investment portfolio. Here I own 600 shares at an average cost of $17.24. And as of now, I have an unrealized gain of $9,000. However, guys, I also had another long-term position with 200 shares at an average cost of, I don't know, it was very low, guys. It was like, take a look at the purchases that I made. I started to build up this position in July 13 of last year, and I made my last purchase on July 23rd of last year. But take a look at the prices that I was purchasing NIO at, guys. $15, $13, 13, 12 bucks. I am a NIO bull. So I had, a give or take, an average cost of $13 or $14. And today, guys, as soon as the markets opened, NIO dropped like a rock, and it broke $30 to the downside. So I decided to sell out of this position, and I ended up investing, guys, with all of the purchases that I made, something like $2,700, and today I was paid $6,000. So I ended up making over here $3,342. This was a nice profit. So I decided to close this position, guys, because I didn't want NIO to keep on dropping, because we have a lot of China FUD out there. And maybe, I don't know, guys, maybe I freaked out. I gotta be honest with you. I just wanted to lock in the profit, because I didn't want NIO to maybe go down to my average cost of this position, because my average cost here is $17.24. And, the China FUD is getting to very insane levels. So I just wanted to raise some cash. So I ended up making over here $3,300 with a trade that I started out last year. Since I closed this position 1 year after I opened it, so I am going to pay only 15% when it comes to taxes. So I ended up raising some cash, and I don't regret. I don't regret what I did, guys. I gotta be honest with you, because I am still long NIO. I still own 600 shares. I am going to keep these shares for the long term, and I still believe that NIO is going to be the second player in China in the electric vehicle market after Tesla. So I decided to liquidate this position. I made to $3,300, and this was one of the trades that I closed today. Another trade that I closed today was on EVgo, guys, because I own 200 shares of EVgo, and I have been selling covered calls left and right. So let me show you what I did here, because on November 16 I sold 2 covered calls that expire on February 18 with a strike price of $20, and I was paid way back then $332. Since EVgo has been falling off a cliff, so I noticed today that the 2 contracts that I sold were at $90, both 45 cents each. So I decided to buy back the covered calls that I sold, and I ended up paying $90, guys. So I was paid $332, and I paid $90. I ended up making over here $242. And I also bought back, guys, let me show you a covered call that I had sold on Amc Entertainment. I had a very solid day today, guys. I have been selling covered calls left and right, and since the markets are falling, guys, if you sell a covered call today and the stock of that company falls 5, 10, or 15% the next day or in the next few days, you end up making money because you can buy back the covered calls that you sold, and if the stock recovers and goes back up again, then you can sell another covered call at a higher price. So this is a strategy that has been working out pretty well for me. So on November 1st, I sold the $50 call of AMC that expires on December 10, and I was paid $215. And this morning, guys, this covered call that I sold was at $9. So I decided to buy it back, and I ended up making over here $210. So buying back the covered calls of EVgo that I sold and locking in the profit on NEO, and also buying back this covered call of AMC, I ended up making today something like $3,700, $3,800. I had a very solid day today, no doubt about it. Now let's go ahead and take a look at the S&P 500 that, as I just said in the introduction of this video, went up today 1.17%, and it closed today's trading session at 4,591 points. Hey, by the way, guys, quickly, and before going over the S&P, I was almost about to forget to tell you this, the most anticipated earnings of this week, guys. So today we don't have anything important. Tomorrow before open we have AutoZone, and we also have after close ChargePoint, which is one of the stocks that I am going to break down in this video. We also have Dave and Buster's, and we also have Toll Brothers, which is a very important company, a home builder here in the US. Then on Wednesday we have GameStop, guys. After close, we also have Restoration Hardware. We also have Path, that is going to be after close. And then on Thursday, we have, we have Chewy. On Thursday, after close, we also have Casco, and we also have Oracle. That is going to be on Thursday. So we didn't have, a very busy week when it comes to earnings, but we definitely have some interesting earnings to go over in the course of this week. Okay, going back to the S&P 500. Relative Strength Index at 48 points. Very healthy from a technical standpoint. Something that is worth pointing out about last Friday, and despite the fact that we saw a massive bloodbath in the S&P 500, the bulls managed to hold this 180 SMA on the 4-hour chart. This is bullish, no doubt about it. And as I just said in the introduction of this video, the S&P 500 has been refusing systematically to go, or let's say to drop more than 6% throughout this year. And that 6%, frame was protected on Friday by this 180 SMA on the 4-hour chart. However, guys, and take a look. Clear uptrend. We are trading between the moving averages, so there's nothing to complain about the S&P 500 over here. However, if I pull up the 1-hour chart, take a look at how we couldn't take on the high or the high point of last Friday's trading session, guys, at 46.10. So we failed at 46.10 last Friday, and today we failed at 46.10 once again. So this is a bit concerning, from where I'm sitting. And I'm thinking, guys, that the most important task for the bulls tomorrow is going to be taking on 46.10 and potentially being able to fill the next gap up to 46.50, which happens to be a former area of support back from November 11 that coincides with this 180 SMA on the 1 hour chart. So if we take a look at the 4 hour chart, the situation looks way better relative to last Friday. But if we take a deeper look at the 1 hour chart, then the fact that we couldn't take on the high point of last Friday is going to be concerning, and this means that the bulls need to take on 46.10 tomorrow. That's the main task that they need to do. Otherwise, if tomorrow we fail once again at 46.10, that is going to be a bad sign, and that might be signaling that we could be potentially having another red day in the markets. And if we take a look at the NDX, the Nasdaq 100, I am trying to go over the indices quicker, guys, because I have noticed that I invest a lot of time in the indices. Nasdaq 100 went up today 0.85%, and it closed today's trading session at 15,846 points. And we have the same situation in the case of the NDX, guys, because last Friday and last Thursday as well, the bulls failed at 16,050 points. And today we were not even close to reach that area in the case of the NDX. So in terms of resistance, that is going to be the main task for the bulls in tomorrow's trading session, taking on 16,050 points and potentially being able to fill the next gap up to 16,300 points, which happens to be a previous area of support back from November 18, November 17, and also back from November 5th. If we take a look at the 4 hour chart, there is nothing to complain about the Nasdaq 100, and as I just said in the case of the S&P, take a look at how the bulls managed to hold this 180 SMA on the 4 hour chart as lower support last Friday. So let's see what happens with the major indices. And mind you, guys, and as I just said, remember, if we take a look at the 4 hour chart of the NDX and the S&P 500, we are seeing, decent drops. But this is not a true reflection of what is going on in the markets. As of now, we are seeing a lot of pain out there. Most of the stocks that trade publicly here in the US are 30, 40, 50, 60% down. So we are going through a silent crash. And obviously, the $1 million question is, when is this silent crash going to be over? When are we going to bottom in? Could that situation start, or let's say, could that situation get started? Can we see a bottom maybe next Friday if we don't happen to get a way worse than expected CPI data report? We will see what that plays out like. Now let's go ahead and take a look at the first stock of this video, Lucid Motor, guys. And this is a stock that has been showing, guys, an amazing relative strength from a technical standpoint. Lucid went down today 5.10%, and it closed today's trading session at $44.86. And the Securities and Exchange Commission announced that there is some sort of investigation towards Lucid Motors because there are supposedly some irregularities, let's just put it that way, when it comes to the merger that occurred a few months ago between Chpt Capital and Lucid Motors. Lucid said, the company said, that I think that they post a statement saying that they are going to cooperate with the investigation, and we can make the case that nothing fishy happened with the merger of that special purpose acquisition company. I am talking about Chpt Capital when that SPAC merged with Lucid Motors. So Lucid went down today 5% in that news. However, guys, if I zoom in here on the 4 hour chart, the main, aspect that is worth pointing out over here is how the bulls of Lucid managed to hold this 180 SMA on the 4 hour chart. So, And since Lucid closed today's trading session at $44.86, I am going to keep a close watch on here, guys, because I'm thinking that if the bulls of Lucid can take on $48.60, which happens to be a former area of support back from November 26th and also back from November 23rd, and at the same time we are also talking about a former area of resistance back from early November, I'm thinking that momentum is going to go back into the stock of this company, and we might see Lucid filling the next gap up to $54.60, which happens to be an area of resistance in which Lucid felt back in late November and also back in mid-November. So if we were able to take a momentum trade with Lucid filling this gap from $48.60 up to $54.60, we are looking at a 12% profit. And take a look at the relative strength index of Lucid, guys. 39 points rather. So I'm thinking, guys, that if Lucid takes on $48.24 on good volume and momentum, I think that the stock of this company is going to be easily filling this next gap up to $54.72. And now let's go ahead and take a look at good old ChargePoint, which is going to be the second stock of this video. And in the case of ChargePoint, the stock of this company went down today 3.85% in a day in which the markets did pretty well, guys. This is something that caught my eye. And ChargePoint closed today's trading session at $20.74. Keep in mind, guys, that ChargePoint is going to be reporting earnings tomorrow. I am not going to play earnings on ChargePoint. I don't like gambling on earnings. Last time that I did it was on Snapchat. And you guys can tell that it didn't go the right way, right? I'm still holding that back. That's fine. Whatever. So, okay, hindsight is 2020. But I am interested, guys, in maybe taking advantage of the hype that we might see tomorrow towards ChargePoint before earnings in order to take a day trade on ChargePoint. So $20, guys, is a very interesting spot for ChargePoint because we are talking about a former area of support back from early May, also back from mid-April, and lastly back from late March. So if tomorrow I happen to see ChargePoint, guys, closing hourly slightly above $20, that might be a sign that the bulls of the stock of this company are gathering momentum in order to make a push higher, in which case they might be potentially filling the next gap up to $22.79, which happens to be a former area of support back from August 4th and also back from mid-May. So if I were able to take this trade the way that I am describing it from, let's say, $20.14, $20.30, and writing my shares up to $22.79, I am looking at an 11% profit. This would be a very nice profit or a very nice trade before earnings on ChargePoint. And if we take a look at the relative strength index of the stock of this company, it is at 25 points. So ChargePoint is due for a relief rally because the stock of this company is very oversold. So watch out for ChargePoint tomorrow, consolidating slightly above $20. And the third stock of this video is going to be Rivian. And in the case of Rivian, guys, this is a stock that I haven't been able to take any trade with because I have chickened out, guys. I think that the valuation of Rivian is absolutely insane. But Morgan Stanley thinks otherwise, guys. And let me show you. So Morgan Stanley said today that Rivian is the one that can challenge Tesla. How about that? And I think that they put out a price target of $147. How about that? Okay, so now that we have Morgan Stanley putting out that very bullish price target on Rivian, let me pull up here the 1 hour chart rather. So I'm thinking, guys, take a look at how Rivian fell today at this 180 SMA on this 1 hour chart, right at $116. Rivian went up today 11% and it closed today's trading session at $116.78. So I'm thinking, guys, that if the bulls of Rivian can take on this 180 SMA tomorrow, and as I always say, on good volume and momentum, they're going to be able to fill the next gap up to $128, which happens to be a former area of resistance back from December 1st and also back from November 22nd. And at the same time, we are also talking about a former area of support back from mid-November. So if I were able to take a momentum trade, guys, from 117 bucks each up to $127, I am looking at a 10% profit. So I am looking forward to taking my first trade on Rivian because today Morgan Stanley said, not because Morgan Stanley said that Rivian is going to be a competitor to Tesla, guys. That's not the point that I want to get across here. But the fact that Morgan Stanley put out that very bullish price target on Rivian might imply that momentum could be coming back into the stock of this company, and that also implies that we can take advantage of the good momentum of Rivian. And now let's go ahead and take a look at the second to last stock of this video, which is going to be Meta. This is the Metaverse ETF. And you guys know that I became a super bull of the Metaverse because I got my Oculus headset, and I think that the Oculus headset is a total game changer. And let me show you quickly, guys, the stocks that are listed inside this ETF. So let me pull up here. Let me see the ETF. I think that Robinhood has the holdings. There you go. So we have stocks such as Nvidia, Roblox, Microsoft, Unity Software, Amazon, Tencent, Apple, Taiwan Semiconductor, Qualcomm. So I think that this ETF is going to do pretty well at a long term. However, I haven't decided yet to open a long-term position on Meta, but I do want to take a short-term trade with this ETF. So take a look, guys, at this one, at how this 180 SMA on the 4-hour chart is coinciding with a former area of support for Meta back from November 10. So I'm thinking, guys, that if the bulls of Meta tomorrow can take on this 180 SMA, they are going to be able to fill the next gap up to $16.51, an area of resistance in which Meta failed last week, and also an area of resistance in which Meta failed back on November 9th. So if I were able to take a momentum trade from $15.70 up to $16.60 each, we are looking at a 5% profit, guys. So watch out for Meta, guys. I think that if the bulls can take on this 180 SMA on the 4-hour chart, they are going to be off to the races. And take a look at the relative strength index. It is at 40 points. So I truly believe that the stock of this company is about to see another leg up. And the last stock of this video is going to be good old Amc Entertainment, guys. And AMC saw a decent recovery day today, even though it went down 0.76%. But the bulls are still holding, guys, $28. This area is absolutely critical. What I mean, critical. What is going to happen, guys? If AMC closes below $28 during 2 or 3 trading sessions in a row, that is going to be very detrimental. That is going to be very negative, because the next important area in technical terms for AMC is going to be at $20, guys. We are talking about a former area of resistance back from late May. So I'm thinking, guys, that the fact that the bulls are still holding $28 is very hopeful. And if we start to see a process of consolidation slightly above $28, remember that $28 is a former area of support back from early August, that might be a sign that we can take a trade on AMC, guys, because the next important gap that the stock of this company is going to have to fill is going to be up to this 50 SMA on the 4-hour chart near $36. $36 is also a previous area of support back from late November, also back from mid-November, and lastly, back from late October. So if we were able to take a trade from $29.30 up to $36, we are looking at an 18% profit. So sign me up for AMC if the bulls keep on consolidating slightly above $28. And with AMC Entertainment, I am going to wrap up this video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember, and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to this YouTube channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and was today a bull trap? We will find that out tomorrow. Peace out, guys.